Good morning. I'm having an admin morning and following up from the weekend's activities to give feedback, etc. So that's my day today. I just thought I'd jump on camera quickly and give you a bit of an update from my findings last week and general market news. So the state of the housing market, well, no surprise, it's tough out there, folks. There seems to be a lot of negativity on the doorstep as I was knocking on doors. Again, a story of two halves. There's a lot of negative people, there are a lot of positive people. It just depends on your experience and you know how quickly that buyer seems to come through your door. House prices have certainly cooled in West Sussex, but we do get seasonal variations, and looking outside today, now is a good time to be on the market. The flowers are out, Sussex is in full bloom, and it looks wonderful to all those would-be prospective buyers visiting the south coast. However, the overall trend seems to be slowly down. Will that continue in the short term? Probably, but these aren't big drops. I'm not seeing massive drops, we're seeing more of a gradual cooling. And it'll be the same for the property you're buying, so it's all relative. So if you're buying and selling in the same market, doesn't really matter too much what the overall picture is. Obviously, when you've been told a price, you want to achieve that price, but you have to reflect the reality that house prices are falling, and over time, so should your asking price be. There are places in England, or the UK, should I say, where property prices have actually risen, but that's certainly not the experience in our area, unfortunately. Interest rates are up again this month, so there's at least one more predicted rise if inflation stays as stubborn as it appears to be. Further news in the future, there's also warnings that Putin will have another war on energy next winter, and probably gas prices at 3 times the current rates. So you know there's going to be knock-on effects for that. That's not going to be great for the affordability crisis we seem to be having at the moment. But on the positive side, our economy is so far resilient. We haven't really hit that recession. Still predictions of a recession in the future, but you know they haven't come true so far. Interest rate rises mean that people on variables who are remortgaging now are seeing big rises in monthly mortgage costs, and with the cost of living crisis that's currently ongoing, it means there's a lot less money in the pocket. Why am I telling you this? Because that means if they can't afford to run their house with their new high mortgages and new high bills, they might have to sell their houses. At the same time, there are also some landlords who are a bit fed up with the new regulation coming in, including regulation that says that the efficiency of the properties they're renting out need to be improved. That could cost a lot of money on some of the older houses. So they are also coming on the market and wanting to sell. What does that mean? Basically, supply and demand. It means there's going to be more supply of property on or coming onto the market, which is so far, because of the high mortgage rates and the interest rate rises, is outstripping demand. What does that mean for prices? High supply, low demand generally means a fall in prices. So with these things coming in the future, it could that house prices will continue to cool. But as I say, they're not crashing, they're not dropping fast. We're seeing a slow cooling over time. On the other side of the coin, there have been new things come out. So, for example, last week there was some interesting mortgage news. Now, there's always little interesting mortgage news and snippets that come out, but this one hit the headlines, which was nice. So Skipton last week released 100% mortgage to great fanfare. It was nice for headlines. Very nice, and I noticed a few of the local estate agents put it on their websites too. Come and talk to our mortgage advisor, 100% mortgages. So it was a good headline winner. However, is this the same as the 100 rate mortgages of the past? In short, the answer is no. The Skipton mortgage, I had a good look at this. So the rate that you can get and the mortgage, the amount of money you can get, ties in with your current rent. So if you're a first-time buyer and you are looking to buy a property and you can afford, let's say, on your income, £300,000, that's fantastic. Can you get this 100% mortgage? Well, if your rent is £750 a month, the Skipton lending criteria means that they will limit your mortgage to £123,000. You can afford to borrow £300,000, but because your rent is £750 a month and they will only lend you up to your rent, that means that you can only get £123,000. If you have £1,000 a month rent, you can only borrow up to £163,000. If you have £1,250 a month rent, you can borrow up to £204,000. And if you have a £1,500 a month rent, you can borrow up to £244,000. So the amount you can borrow on this particular 100% mortgage depends on your rent that you are paying in the last 12 months, and they take an average. So what does that mean for first-time buyers? And this 100% mortgage that came on the market with a lot of fanfare basically means not a lot of people are going to be able to use it. Starting price for a house in this area is $250,000 or thereabouts. So if your rent is around £1,600 a month and you want to buy a house, this could be the perfect product for you. If you are in a flat and you're paying, I don't know, let's say £1,000 a month and you want to buy a house, well, you can only borrow up to £163,000, and that ain't going to buy you a lot of houses in this area. However, it could buy you a flat potentially. Maybe if you're looking to downsize in a flat. So is this product good for first-time buyers? Well, it depends on your own situation. If you have high rents and no ability to save for a deposit, this could be for you, but I think the target market is very limited. So it's not going to generate a boom of first-time buyers looking to buy a property, is what I'm saying. However, there are other 100% type mortgages out there that have been out there for a long time. These basically work on a deposit from a family member, but that deposit is relatively safe and not used to purchase the property. And there are also other innovative lenders such as Generation Home, who have deposit boosters and income boosters. So if you're a first-time buyer, if you are paying those high rents, then what I suggest you do, because your income can obviously afford to pay those high rents, is talk to a whole-of-market independent mortgage advisor. The reason ideally a whole-of-market, and the reason that's quite important, is because a lot of these innovative lenders won't be on the tied panels of lenders. Tied panel lenders tend to be fairly limited to high street lenders and things like that. So ideally a whole market lender, and you can go on sites such as Vouch For, where people leave reviews of those mortgage advisors, and if you search on there, I will be on there also, as I am an independent whole of market mortgage advisor as well as an estate agent. Being a mortgage advisor is particularly useful for my sellers, because when I check chains, when I offer check finances, I can ask pertinent financial questions, and then I can advise my sellers if I think that the finances look ambitious. Why is that important? Because hopefully it avoids those shaky chains where you make a decision to get yourself involved in the chain based on incomplete information, and then 4 months down the line it all comes to a crashing end. You've wasted time, you've wasted the market opportunity, and you're 4 months down the line, and it's not where you want to be after you've spent out money on surveys, etc. So it's quite important for my sellers. Anyway, back to sellers. It's not all doom and gloom. There are buyers actively seeking houses, which probably includes you if you're looking to sell a house. The sun is shining most of the time, so make your property appealing to viewers. Give it a spring clean, get rid of some clutter, paint the door, whatever needs to happen to give your first time buyer a really good impression. You need to treat, not your first time buyer, your buyer a good impression. You need to treat these buyers as if they are precious. You need to treat them like royalty, because there aren't many of them about, and you want them ideally to buy your property. So make sure you treat them as royalty, dress up the house, etc., and make sure your agent is too. They're getting back to them, they're following them up. Make sure you're getting your feedback from them. I think realistically you have about a month and a half before the summer lull kicks in and everyone thinks about summer holidays and goes away. So talk to your agent now about new photos, about a fresh marketing campaign, and about getting your property out there in front of all those buyers as soon as possible. Even better, if you're at the end of your contract, say thank you to your agent, say goodbye to your agent, and come and talk to me about a fresh marketing campaign and selling your property the Richard Cullen powered by EXP way. Right, I've got work to do, so I'll leave it there. Just leaves me to say have a great weekend. Bye now.